Hey guys, what's up? Alec back with the daily stock market, and today we're going to talk about a few different things, but the main bulk of the video is going to be 5 different swing trades to have your eyes on now. And these are going to be a little bit more of a longer term swing trade, anywhere from 1 month to 3 months, all the way up to 6 months. And I know you guys wanted me to talk about options and a few different things too, so we'll kind of cover a few different things in this video if you stay all the way to the end. Now, you just got a notification. You'll see 52-week high for Amazon. Wow. So we'll talk about Facebook, Apple. Now, first up, we do have to talk about Facebook, up 7% in one day at $330. It's an all-time high, and I'm up 62% on them. And I've been taking a lot of profits, as you guys can see right here. I've been making money left and right on them. That's over $3,000 in profits that we already pulled from Facebook, and we still have $725 left in Facebook to see how high they can go. Now, I was also reading this, so feel free to pause through it and read through it. It's just a lot of people ended up raising their price targets of Tesla all the way from $360 all the way to $400 per share. We also have another one on Apple. It looks like a lot of people raised their price targets on Apple all the way from about $150 to $180 per share. And that's because of their blowout quarter. They absolutely killed it. So if you want some of the numbers, make sure you follow me on Instagram, because I post the expected versus the actual numbers all the time. You can even read through these articles or just type it into Google, and I'm sure a million different articles will come up telling you Facebook numbers and everything. So Facebook's killing it, Apple's killing it, and Amazon's now up 5% after hours, guys. Look at that. That's why I tell you guys, if you're focused around a lot of like penny stocks and having me talk about ZOM and SNDL and some of those penny stocks, and your whole portfolio is all penny stocks and risky stocks, you need to diversify into some of these safer big tech stocks. Now, personally, I would be waiting for a dip on some of these. Amazon probably closer to like 3,200. And don't get me wrong, I will talk about those penny stocks, but if your entire portfolio, like 90%, 80%, 100% of your portfolio is highly risky stocks, you need to diversify a little bit more. If you don't own any Apple, Amazon, Facebook, Google, Netflix, Microsoft, or anything like that, you might want to buy a little bit into them, especially once they dip and we see them going back, taking like a 15, 20%, even a 10% dip will be attractive for big tech right now. So with that being said, let's get into the swing trades here. So the first one we're going to be talking about is Spotify. Has some great potential. They're on the lower end of the support and resistance right now, between $230 a share to $260 a share. I think it's a fair price point to buy into Tesla, and I would want to ride them all the way up to at least $300 a share. And I think they can even break all-time highs if you plan on holding them on the longer side. Now, you can also see I have 2 shares. I bought two shares. I posted on my close friends list. So if you want to get more up to the minute action, I bought 2 shares, and we're doing a swing trade. So in my opinion, if this one goes low as $230 a share, that's probably the time you want to start looking into an option into this stock, even though it's a little bit more expensive, on the expensive side. So I think swing trading it, if you can buy fractional shares even, is very great potential, anywhere from $230 to $260 per share. The next one we have to talk about is Endphase Energy, and they went down about 10% because of earnings, and they went down even more today. So they're down about 12% on the week, down 16% just from the 27th. So they are down a huge percentage in the week, and they were just starting to recover right here too. So you can kind of see they're back at the support. I would say anywhere between $130 a share to $150 a share is a great place to buy Endphase Energy. This is also a long-term hold, keep in mind. This is one that Kathy Woods is very fond of. It's one of her largest position holdings. So if you're a long-term holder, it's a great addition to buy into the dip. But it also has swing trade potential because it just went down to the support very sharply. Especially if it gets as low as $130 a share, you probably won't want to pass that up. And if you don't know about Endphase, here's a little bit about them. They operate at a higher margin than their peers and achieve more revenue growth. The company offers best-in-class products and converting solar panel DC power to AC power. Exciting new products ensure further growth in the next couple of years. Endphase aggressively expands its addressable market. The stock price rose fast in 2020, although it is expensive on a value level. So yeah, if you look at the PE ratio, they're 180 PE ratio, but in the stock market, there's a lot of other giants that are trading at a PE ratio higher than 180. And if you want to learn what a PE ratio is and what earnings are and how to read all that stuff, I have a video course that will walk you through all of that information. After that, we have Teledoc down another 8.3% today, 9% actually today, and 6% in the week down. And it's basically suffering from its all-time high. If we go back far enough, it looks like it's down 40% still from its all-time high and went down even more today. So 170, it looks like 171 was the recent support, and it broke below that. But if we go back far enough, it looks like 157 is one of its lower supports here at 157 or 160. So I think if you can buy between 150 to 175, that's a great long-term hold position. But there's also swing trade potential because for this one to even get it back up to $220 a share, $250 a share, remember the all-time high was about $300 a share. I think it can go that high again. Teledoc is a virtual healthcare company. They merged, creating an all-in-one digital healthcare solution. With healthcare being enormous and efficient industry, Teledoc has an opportunity for disruption. So this is a disruptor stock. Given the company's projected growth rate over the coming years, the current valuation on Teledoc is attractive for long-term investors. So this is a little bit more of a long-term stock. The reason I added to the swing trade is because it dipped even more. And the pullback is getting very attractive for Teledoc. Looks like it's bottoming. The merger is complete and has huge growth potential on the upside. The valuation is much more reasonable with the pullback, and Teledoc healthcare providers were in the perfect place at the perfect time a year ago. The world was suddenly struck with the crippling pandemic, but people needed medical care. All the same, with billions of people suddenly stuck at home, the Teledoc healthcare model became huge. And that's obviously going to be the future. Not everyone wants to go into a sick office and just for a checkup or just for something small. They rather have an iPad out and talk to their healthcare provider online. And it's not as awkward when you can talk to someone over FaceTime or even over the telephone where you don't have to be face to face. And all these stocks on the list have long-term potential. That's why I like to swing trade great long-term stocks too. Because even if they don't go up as quick as you want them to, if we end up having to hold for long-term, they definitely will be higher in the next few months. After that, we have NEO down 5%, down to $39 per share. So this is a good stock to be loading up for long-term. You might want to wait until the earnings are released or announced for you to buy into the stock because they could be going down all the way to $35 again. Because remember, the chip shortage absolutely crippled Q1 earnings for EV stocks. So that's something you might want to wait for. I have a lot. I'm already down 5%. I have $1,700. But that's okay because I'm a NEO really for the long term. I know that there'll be a $55 stock again sometime soon and even a $60 stock or more in the future there too. So if they go back down to $35 or even $30 a share, I'll be snatching up all of the NEO shares at that point if you guys are wanting to sell them. Also, I cover a lot of the earnings on my Instagram, so if you don't follow me there, I just posted about Amazon stock. Revenues up 44% on the year. Wow. With the EPS is $15, a solid $6 above consensus. Nobody does that, guys. Nobody beats $6 above consensus on EPS, and nobody has an EPS of $15 a share. Show me a different company, another company that beats EPS by $6. It's absolutely unheard of, and this is a multi-trillion-dollar company, and they're still growing revenue 44%, even at a $1 trillion company, which is absolutely insane. So if you are watching this video and we see that NEO hasn't moved much yet, check my Instagram out because I'll probably post an update on NEO, especially if it moves. I have a feeling that NEO is going to be missing on earnings because of the chip shortage. And the last one to talk about today is going to be Tesla, guys. It's a below $700 again. And you guys know when it's below $700, I typically stock up. My average cost is $646 at $1,800 a share. So I would like to see this one go below $600 again. If it does get in the $500 range, that's when I'll start buying a lot heavier. I posted on my close friend story today. I bought about $100, as you guys can see, bought $100 today on Tesla, buying slowly. The last time I bought was March 29th. So if you want to see exactly when I'm buying stocks, DM me on Instagram and I'll add you to the close friends list. I'll send you an application so I can help you out the best way possible and send you my website after that. So with that being said, Tesla, like I said, I want to buy below. Anything under $700 to $600 is a great buy. Take advantage of the dip, especially if you're a long-term holder. This one's a great swing trade because I think if you buy below 700 or if you get in at $500 and something dollars a share, $550 a share, if it goes back to $600 a share, I think that you can swing trade this one easily back up to $850 a share or even higher, depending on how long you want to be holding. So normally I'll end the video there, but if you guys want to stick around, let me know if you like the longer videos where I add a few more bonus stocks and you stick around to the end. We'll talk about ZOM, ticker symbol ZOM, and this one is down 5% today, and in the last month it's down 38%. So it can be a great potential to buy the dip, down about 50-60% from all-time highs. And remember, this one was just at $2 last month. So with that being said, I think anything between like 75 cents and 90 cents is a good buy for ZOM. The market cap is less than $1 billion, and they've been pretty on top of projected earnings. They're almost a positive company. ZOM recently launched its first commercial product. Veterinary diagnosis is a competitive but growing field. The company's platform had a chance to be a disruptor. After recent sell-off, shares are attractively priced. Rising shares priced attracted ZOM's partners. We won't read all of this, so if you want to pause it and you're a ZOM investor, pause it, read this. I highly recommend it. But overall, I think that this one is a high-risk category. It is a penny stock, so you don't want to invest too much money on them. You want to go a little bit lighter. But for them to go up to $2 again is not impossible. So if you want to be buying between 75 cents and $1, I think is probably the best price to swing trade ZOM. So if you guys want me to do more bonus stocks at the end of videos, maybe I'll do 2 or 3 in the next video if I get enough comments below. I really hope you guys enjoyed this video. We're on the road to 90K right now. And if you want to join me and be a part of the program, here's my Instagram here. Just DM me and say you came from YouTube. And I'll be more than happy to help you out, take you under my wing, and show you what it means to be a successful trader. So guys, make sure you're subscribed because one of these videos I'm going to be doing options. I'll probably be doing that next week. If you want more option plays and to know what options I'm in, join the close friends list because I post on there 1 to 2 options per week. And a mindset you really want to have is that red and dips are a good thing. So the red days, bigger the red day, the better because you're able to buy into the dip because we know the stock market always comes back. It doesn't matter how big the stock market dips, it always comes back in due time. So red is a good thing. Remember to buy low and sell high. Never ever buy high and sell low. That's a rookie mistake. All right, guys, I'll see you in the next video. Remember, don't time the market, buy the market. Peace.